All right, in this example, we're going to talk about the ranges, the bullish and the bearish range on the live time frame charts. So as you guys can see over here, all the way down to the very bottom, we were going at a bearish trend and then price started to reverse going bullish. The last range that you see over here pinpointed is bearish, right? Price breaks out of this range, price breaks above this range. Now you can clearly see here how people, other traders, retail traders, were trying to buy and sell within this range. Okay, this was a bullish range that was trying to move up while the markets were bearish this whole time, and then price just breaks out of it. All right, once price broke out of this range, price went bullish very quickly, creating another range. All right, you can see again, buyers and sellers are trying to buy and sell here within this range, anticipating for the markets to go up, obviously, buying way too early, selling way too late. Once price broke out of this range, took out all the sellers over here, the buy side liquidity, and then took out all the sell side liquidity. Again, we'll talk about liquidity in another video, but price came out here after it took out the whole range, and then here where your buy is, right, and then price extends. Okay, just remember what I mentioned in the previous theory range videos, that when price extends, ranges will typically happen at the high at the extension or at the low of the extension. So once price extends, ranges will happen here at this high, and then or price will pull back and retrace all the way back and start creating more range in order for price to extend. Okay, so let's continue further here. We have an extension. Once price extended, now we need to wait patiently and wait for the markets to obviously either retrace all the way back or see the range at the very high. Okay, because you have the reason why ranges happen again is because there are buyers and sellers that are buying and selling quite often fast and quick. All right, anticipating for the markets to just do something. But we at Royal Blue FX, we're patient and we wait for prices to give us that full retracement, and then tap us at the demand and or order block, and then wait for price to extend. Okay, so as you can see here, we have trend line ranges, prices ever so slightly moving upwards slowly. Prices people are buying here, buying here very, they're buying here, and price isn't really going anywhere. As you can see, there's the high, here's another high. All right, what a lot of people are doing here is they're just gambling their buys and sells, right? Even though price did go up, all right, you can see here, whoever sold way too early got taken out by this wick of this candle. Okay, so all the sellers were taken out at this range. Buyers here on the other hand were trying to buy and were not taken out. But if you look here closely, there was another range that happened, a sideways range. Okay, you can see this wick right here took out this whole range here. Okay, so whoever was trying to buy here got taken out. Okay, everyone's stop loss is right at the low, at the buy. So price extended, pushed all the way up at this high, taking out all these sellers, and then price continues from here on out. Okay, how could you have benefited from this move? Well, once price breaks, showing us the price is rather bullish, we could wait patiently now for price to retrace. Okay, you can see here, here's the retracement. Okay, here's where our order block is, or where our demand area is. Come on, didn't highlight that right. There's our demand area right there. You can see the form of manipulation. Again, we have more range manipulation. This is sideways manipulation. Okay, if you go even on the lower time frame, in the 1 minute, you can see price just zigzagging like this, fairly at a fair price. Same equal price. And then price takes out the bears here. Then price takes out the bulls that we're trying to buy here. You can clearly see this move right over here. Let me just make this line here. There we go. Bears were taken out. You can extend this other low here. Bears were also taken out too. and then we waited patiently for the actual move, for the actual extension move, to take price even higher. Okay, so let's continue forward. You can see here again, once the extension happened, price is creating that range, that trend line range. It's a famous trend line range, right? Like the sideways ranges here. You can see price is not moving. It's making higher highs, but yet it's not, making or breaking our, sort of our next price. It's not extending price at very high, like this low here when price was bought here. Here's where the tip of that high is. That's how high the price is, right? You can clearly see this low here. If you see all the way to the right over here, you can see that price was at 0.86469 and then ended the last high here at 0.87304. So that's a pretty big difference between the two, right? As opposed to just buying from this little low to this little high, and you're only making pennies to the dollar here. So what I'm trying to say is pay attention to these ranges, because they won't make or break your trade, essentially the trend ranges. But once you get in this, but wouldn't you rather, let me just say this, wouldn't you rather have the most out of this trade, the biggest extension, say from this area here, okay, if you were to enter here at this low and aim at this high, right? So there's two differences here. Again, as you can see here, people were trying to buy here, or sell here, and then people were trying to buy here, right, way too early. Price then comes out, takes out the sellers first. I'm sorry, the buyers here first. As you can see down here with this move, let me mark this here, this extension here, took out all the sellers. So this is why it's a good sign to avoid ranges at all costs. Wait for ranges to occur and happen in the market before you act. Okay, this is a good sign of discipline too. If you're a disciplined trader, just wait for these things to happen, because there's no point in buying and selling right away. Another good example, I think, as a trader, is to patience is also a skill that a lot of people don't have. Once price, so let's continue here. Once price has tapped the demand level, you can see along the way this extension created ranges along the way. These small ranges here. Price wasn't going anywhere. Price was just lingering around here, and then once price broke out, with this extension right over here, you can see you can just wait patiently for price to come back to a supply level, obviously, and then wait for price to sell off again at this low. Now, these are very tiny ranges, right, on the extension. If you were watching all the structure trading that I've been teaching along the way, you can understand that there's three types of structures. Obviously, there's bullish structure. Okay, there's the major structure, there's the substructure, and the minor structure. This is the minor structure going up, and the substructure is always going down. So you could be trading the substructure going down in this case and profit some, make some profit here, right? Obviously on the lower time frames. Okay, let's continue without getting too off away from the ranges. So once price has tapped our demand level, notice again, this low was respected. Price came all the way back. It created a trend line range to the upside, and it also created a trend range to the downside. Notice how we have a ranging trend going upwards. Okay, now this is actually a very healthy range. Okay, we're also going to talk about order flow in other videos, but this is also a healthy order flow here, which we'll talk about in later videos. But ranges are also decent to trade as long as you know where the major structure of the market is going. In this case, the major structure is pushing up. Order flow is going up. So we can anticipate moves from this range Meaning, once we see a break of structure, right here actually, you can see there was the high, here's the low, here's that next high. Price ever so slightly broke this high, but it did break this high. Sorry, that's a terrible trend line. Let me make this correct here. You can see that if we zoom in here, price ever so slightly broke structure and pushed all the way back, retraced. Then creating more ranges in here, as you can see, right? More range here, price is going sideways and price breaking out, right? But in a nutshell, this is a really good buy. You can buy here, right? Price pushes up again, right? Creates more range in here, price pulls back here. You can look for more buys. Price creates more range before price breaks out. So, the explanation, or the nutshell to this story, or this explanation here, is that you can trade ranges. Notice that the range was at a very low. Ranges happen at a high, ranges happen at a low. So this is a trend range that price finally broke out of, extending right over here, breaking that last high. Notice again, once this extension has occurred, we had more sideways range. Don't trade this range. People are trying to buy it as soon as price breaks out. You can see retail traders trying to buy it so fast here, and then they get knocked out. The sellers here got knocked out by this move. The buyers right down here got knocked out by this move, to only then retrace back at an order block, right down here, for price to extend. Okay. Once again, I'm going to make this very clear. Ranges are a manipulation in the market. They're a very disgusting move that happens in the market, but they are also good moves for those smart money concept traders who know how to trade them and how to avoid them specifically, because they are a sign in the market for smart money concept traders, for any trader really. But they are just a manipulation and a sign in the market that you want to entirely avoid and understand where they are at all times. Okay, let's zoom out a bit. Once we zoom out, you can see we had a break of structure here. You can see that this was the lowest at this point, and this was the highest at this point. You can see that we had that break of structure violated. Now, we can obviously talk about highs and lows on major time frames like this. Obviously, here you can see there's a high, there's a low, there's a high. Come on, this is not going as smooth as I'm thinking it is. It's a high, there's a low, there's a high, there's a low. Here's another high coming up, and then here's another low, right? We can always talk about, there's always a fish eating a bigger fish all the time. Sorry, there's a bigger fish always eating a smaller fish. In this case, we're just focusing on the 1 hour as our higher time frame, and we're only focusing on this as our direction, this information as our direction. We're not typically focusing on this right now. So typically this is a downtrend. You are trading we are looking and analyzing on a retracement, on the markets pulling back on a major time frame, probably on the 4 hour. Anything above the 1 hour is their major time frame, and the major trend is pushing low, right? So this is why we're getting this behavior here at this very high. To continue back on this, okay? So we have this low here being violated. We have this high being respected by this high here. Okay, this high was not able to go above this high. You can see a steady trend range going to the downside. There's a bunch of ranges happening here, to be honest. You can see ranges are happening here, the big one, right? You can see also sideways range happening. You can also see more sideways range happening over here as well. Okay, prices aren't moving anywhere fast, anywhere quick, except maybe potentially this move here. Okay, but you're stuck in this complicated range, this complicated high and low within all these ranges. Okay, this is where you get destroyed, not understanding what is typically happening here, right? And we'll go through other videos and we'll explain how to enter after all these ranges occur. Okay, so yeah, so all these ranges happen here and here and here. You can see this huge extension just breaking below all these ranges. these sellers were taken out by this range, okay, by this extension actually, right over here. You can see that the buyers, whoever was trying to buy here, come on trend, come on line, the buyers here were taken out by this move, okay, by this extension right over here. So this is a very complex area to be in, because neither the high was broken here, okay, so this high isn't going any higher, so why should we be looking for buys here, okay, and neither the low, well, the low was violated, but just barely by a hair, okay, but it's still considered a break of structure. So typically as a trader you would look for prices to pull back and retrace, which just happened here, right? And you can look for the markets to respect the supply area to then look for sell-offs here, okay, a sell-off like this, all right. And then once the sell-off happens, you can clearly see all the ranges, everyone that has been buying and selling here are all taken out. Clearly, it's how the game works with ranges. You know, these are set up by the banks and institutions for you to be taken out, for the banks to take out your money, to take your money, right? You can see with this extension we have small ranges, prices going sideways equally, okay, not going anywhere. Once that extension has appeared and taken out the buyers here, hasn't taken out the sellers just yet, okay, we can wait patiently for the markets to pull back and retrace back to an area like this, back to a supply area. Once price has extended here, price created more range. Again, remember when I say when price extends, ranges are either going to happen at the high or wait for the retracement and pullback, and ranges are going to happen at the very supply or demand area. In this case, it will be the supply area right here. Okay, and then price will start to extend again. That's just how ranges work in every scenario. So we had two extensions here. 1 and 2. Once the extensions have happened, we wait simply for price to pull back at an area of supply. In this case, it's supply because the markets are going down. As you can see here, people were trying to buy and sell, and they were not successful at doing so because price didn't pull back just yet until the market's here, until the extension happened over here. Okay, there's an extension that happened here. This is a retracement, a pullback. That price pulls back and comes here to respect this area, okay, of supply. And what do you know? Price then starts to extend again. Now, notice again, price reverses, or then, makes a retracement. Price makes more range, liquidity. Okay, there's two things here actually. You can see clearly. There's sideways liquidity, or sideways range, I'm sorry. And then there is trend line range happening in here. Okay, price isn't moving fast anywhere. So people are buying and selling and getting crushed in here. All right. Once that extension has happened, once again, you can see a small range has happened in here. People are buying and selling. And then the buyers here got taken out, thinking, well, the retail traders thinking this is a triple bottom, 1, 2, 3. They're trying to buy here to take price up, and they fail. All right, once this range has been taken out, price extended, creating more ranges. Okay, we have more ranges here. We're just waiting patiently for markets to come back to these supply areas. And in reverse, it would be demand areas, right? So, and at times, price doesn't come to your supply or demand area just because the market has a plan on its own. We don't know what that plan is. We don't know when price is going to come back to the supply or demand zone just yet. We'll talk about that later on a supply and demand zone video, but in this case, just want you guys to pay attention to the ranges. Okay, ranges right here. ranges created trend line range, not breaking anything high, obviously. Price isn't going anywhere. You can see price broke structure right over here, taking out all the buyers. Okay, buyers were taken out. Okay, price retraces here. This now we can talk about, you know, minuscule, very small, on the very small time, on the one time frame. You can see this is, you know, this is a big deal on the lower time frame, meaning that this is a big range on the lower time frame, and there's a big range on the lower time frame too. You can see to strike here at this sell-off right over here, right? And you can see price just taking off this way to the downside. All right, let's look over here. Another range, sideways range. People are trying to buy, trying to push price even higher because they think, okay, well, you know, price broke and now it needs to retest, like those retail traders think, right? And then take another sell, right? But where in the world does price even tell you that price is bullish here? Nowhere. Price is still bearish, creating ranges. Once the bulls were taken out, price came back, okay, taking out more ranges here and here. You can see right there, all right, to continue pushing price even lower. And then clearly we created more range side liquidity, all right. Once this liquidity or this range was taken out, okay, price created more ranges to then take more money for people that were trying to buy here, thinking that it's a buyer's market. Price took out the buyers again. Now price had a huge plan for all the sellers that were selling all these ranges to then be taken out right over here with this extension. Price starts to reverse, taking out all these ranges, all these sellers here, okay, all these other sellers, and all these other sellers here. Okay, if I zoom out, look what's happening. Price did that job, took out all the buyers and sellers. Notice how these wicks are higher than this high here. Let me take out all this drawing here so I can show you all. Okay, right over here. Notice here again, let me just put a line over here so you can see how tricky this market is. Boom. This was the high at this point. All the wicks here took out all the sellers from this high, from this high, from this high, into this high with this single pullback. Okay. If you zoom out, you can see how these are major. This is a major structure. Okay. Price breaks below, retraces, breaks below, retraces, breaks below, retraces. When price breaks below, it needs to retrace, taking out all this unwanted range, movement, creating all this range for the sellers once price pulls back to take out all the sellers later with this single move. Okay. So once price has tested this area, taken out all these ranges, price created more range at the pullback, at the retracement. Okay. And once price takes off, you can see we have more range moving here. People were trying to buy here, going up, because they thought, okay, it's a break of structure, so why not look for buys? Sellers weren't taken out from here, though. There's sellers that are still at this area, the smart sellers, right? Smart money concept traders. Once price is taken off, we broke this range. Price then comes back here, creating more trend line range for these people to be taken out very soon. All right. Once we reach this low, we had another break of structure right over here. Let's mark this out. We have another break of structure here. Right there. And then you can see price then creates more trend line, more sideways range. Okay. For the sideways range to be taken out, for you to then look for sellers right at this area to take price lower. You can see there's trend line range going up, manipulating other buyers to think this market is a buy. Price is moving, at a very tight knit area here. There's not a lot of big difference from the sell to this buy, from the sell to the buy, right? Not a lot of difference. It's not going to make or break this trade. So what happens is Sellers continue pressing price down, taking out this whole range here, waiting for the retracement, and then looking for the sell-off right here, right? Boom. All right. So continue. Price takes another low, break a structure, pulls back, creates a mid-range, which is not always typical, but the range usually happens at the demand or supply area. In this case, it's a supply, or it happens at the extension, at the end of the extension of the extension, right? Price created this range here, taken out these these sellers. Price created more bottom range here for all the buyers. When price is taken out all these sellers, respecting this demand, the supply area right here, price then starts taking a low here, taking out all the liquidity, all the buyers here, then to wait for the next sell. Boom, right? Let's zoom out here. You can see this. The market just repeats itself over and over and over. It does the same stuff over and over. If you can find these, you can be keen at understanding how simple it is to know that, the banks and institutions are just creating liquidity for anybody to be taken out, because that, we'll talk about liquidity later, but I know I keep talking about liquidity, but they create ranges for dumb money. They create ranges for smart money concept traders and for themselves, for the banks and institutions, to take out these ranges, because it's a sign of money for them, right? You can see trendline liquidity, or trendline ranges creating here with this move taken out. Most of these the sellers here, there were buyers that were trying to buy here because they had probably signals that said price is still it's a buy, so I'm buying right now. So anyone that was buying here got taken out easily. Okay, once price shot up quickly, taking out the sellers. Price pulled all the way back again, taking out the last buyer here, to then price move to the opposite side. Okay, pushing bullish now. So as you can see, we're at this stage right now where price is at its current stage at 0.84852. all right, and now we're looking for bullish bullish market here, okay, for price to keep bullish, going higher. All right, and I just marked this here just so you can understand the two difference between the bulls and the bears now, that we are indeed a bullish market here for you to look for signs to buy. Just kind of quickly, as I want to show you guys here, the signs of manipulation. You can see here clearly we had a sideways range. Let's make this a black color here. You can see here price extended, creating more range upside, at the very high of the range, and then price breaks below the buyers, and below the buyers here, tapping the order block and demand area for then price to shoot back up, taking out the sellers at this high. Okay, once price is extended, your job now is to really wait for the range to happen. You're looking for signs of range. We know that there is a break of structure. Now what we're waiting for is for price to bunch up together, creating either sideways range. Hold on a second. For price to create sideways range, okay, or trend line range. So price could start doing this, okay, something like this. And it could happen at the very high here. Sorry, I know it's not smooth enough here. It can happen at the high here, or the range can happen at the very low. Here, price does this, starts to range like this. If my pen can draw perfectly here. Something like this, and then price could start pushing up this way. Okay, taking out the sellers and maybe taking out the buyers, depending on what the move looks like here. Kind of like this, taking out the buyers, taking out the sellers, and then tapping back into an order block or demand area, and then taking price back up like this, taking out more liquidity or more ranges. Okay, that's typically how a range should look like in the markets. and how manipulation looks like in the market. If you master this down, guys, you will be unstoppable, because now you'll know the difference between, or at least you'll know how to be a lot more patient as a trader, to expect these moves in the market, to expect these ranges in the markets, because they're because once you expect these, you can be patient enough to wait for price to come to your demand and supply level, and then to look for your entry to take a probable trade. Okay, a high probable trade is a trade that shows us all the signs in the market, like the ranges, like the retracements or the pullbacks, like when price touches your demand level. Okay, these are all high. That's what makes a high probable trade a high probable trade. Okay, now just a few notes. I put a few notes over here for you guys to talk about just kind of quickly to end this video, because I know it's running too long here. I just want to answer this for you guys over here, like what we're trying to achieve when we see ranges. Okay, number one is to be patient. Okay, ranges will show us patience, and we can learn patience from ranges. Okay, number two is wait for a strong bullish or bearish move in the market. As I mentioned, every time price breaks a new high or a new low, okay, in this case it's a high because we're going bullish here, we want to wait for a break of structure, then we want to wait for the sign of the manipulation, which is the range. Okay, once that range is created, then we can look for potential areas where the market takes out that range, like here, takes out the low, then takes out the high, it comes back for the buy right here. Okay, and then price takes off. That's what a high probable trade looks like. All right, and you might be asking me, well, are ranges tradable? Yes, they are. Now, this is a question that I really wanted to answer you guys, because you can trade ranges as long as you know you're in a range. Okay, so I'm going to talk about this one kind of fairly quick to end this video, but ranges are tradable. So if you look over here, anywhere really, but let's talk about this one. When ranges are occurring and they're breaking structure like this, as long as you know you're in a range and it's creating a range, behavior, a manner here, okay, and you're well aware that the markets haven't come and touched this order block yet, or this demand, you can just patiently wait for the market to either come and touch your demand, or you can tell yourself, okay, well, I know this is a range, or it has the potential to create a range, right? A trendline range or a sideways range, right? Since we're in the 1 hour, we're treating this 1 hour as our higher time frame, you can go in the 5 minute to look for entries, right? At this demand area, and you can see obviously price did go up, right? Typically, if you know it's a range on a higher time frame, you should understand that it's a range on the higher time frame, and that's all it is. You can't trade it. You can't treat it as a full extension in the market on the higher time frame, because we know this is going to be the fuller extension of the higher time frame, not the information that's inside the range. Okay, so typically you can trade the ranges and only target the current highs of the market within that range. Okay, you don't want to target anything higher above, because we don't know what's above, and we don't know if the market is going to push higher. Okay, we can only be guaranteed what price is showing us within that higher time frame. In this case, we know that price is creating a range, so we're only targeting those current highs right here. We'll talk about targets and take profits on another video, but just showing you what to look for. And to answer the question is, if ranges are tradable, they are. Okay, once price has made this high here, obviously you can look for entries here, and we're going to talk about entries on another video. But obviously you can see here, people were trying to look for buys here. People try to enter this and bought, trying to take price up. Instead, they failed and were taken lower. Here, the money was taken out. Okay, everybody has a trade in a range. Okay, they have a trade placed. Their stop loss is right here. Okay, And what does this market do? Come out and take out everybody on a range. Simple as that. So one last one here. Let's go on the side range. You can see the side range here. You see this price made a low, this price made a high. Right? You can wait patiently. Now you know, okay, well, I'm in a range, period. I'm going to look for a buy here now, right? And then take a buy and then target this high. That's as far and as high as I'd go, because I don't know what is above this range, right? We don't know if the range is going to come out. We don't know if the market is going to come out here and take out the sellers first. Okay, for all we know, price could come down here and take out the sellers first. The buyers first, and then the sellers second, and then price can come back to a demand area like this. Oops, like this. Come on, and then go right back above, like that. Okay, so again, you can trade ranges as long as you know you're in a range, behavior and manipulation, right? You can see price went up to the high, price came back to the low here. You could still look for buys in this area for prices to keep going higher. Okay, just knowing that this is the 1 hour. That's it. It's no more. It's not the full extension in the market. All right. So I hope this video showed you really the examples and the idea behind ranges, because once you learn this stuff, you'll be powerful. So go over it and make sure you mark out ranges. Do it as a practice every single day, or every as many hours or minutes as you have or whatever. Go over and mark these ranges so you can finally understand what ranges are and what they do in the market, and how you can avoid them and how you can trade them potentially as well.